Hey, welcome everyone. So good to have you with us this evening. Tonight's going to be very special. I am really excited. Back from Australia, my family and I got back late last night from Aussie after a couple weeks of amazing weather. Shout out to all the Aussies in the team again. If you're anywhere over there, Queensland in particular was gorgeous. So yeah, got back last night, lots of fun, seeing my grand, my uncle, my auntie, and just having some family time between the Aussie Zoo and also the Currumbin Wildlife Centre, just a bunch of beaches, stayed in 3 different places. It was wonderful. This time of the year, sorry if you were stuck in Auckland, it looked like the weather was not very fun over here. But anyway, enough about that. Tonight is a really special night. Dad has put a lot of effort into preparing some really cool mindset content for us. And so I'm not going to waste any more time. I just think it'd be awesome to dive straight into it tonight, into the nuts and bolts of what makes the right mindset and how to tackle 4 of the, and I'm going to let Dad fill in the rest. So guys, give it over to Dad. I'm going to find you, pin you, and we're going to rock and roll. And in case you're also wondering, yes, we have our live analysis in the morning as well, because we're doing this on Thursday instead of Tuesday. So I've got a night in front of me of editing and all sorts of things and going to bed and getting up crazy early with a bit of jet lag. So Dad, once again, thank you so much for being with us tonight. I'm going to hand it over to you. Let's rock on.
Well, good evening. Thanks all for joining us. Hope you're looking forward to tonight. I know Taz let it out the bag already. I'm going to talk about trading psychology, developing a good mindset, and especially I want to talk about dealing with fear. So that's one of the main things, looking at the 4 main fears of trading. And so please don't dial out. This is so important. I remember in my early days of trading, when the early mentors I was following said, tonight we're going to talk about trading psychology, or this morning I just dialed out. I thought, no, I don't want psychology. I want to know how to earn pips. I want to show me entries, show me exits, show me how to make money. I thought, which is probably true of some of myself, I'm a positive optimist. I don't need any kind of mind trading or psychology. I'm whole, I'm healthy. Just show me how to make money. How wrong I was. I realized, wow, psychology is just so important, trading psychology. I mean, before you experience, you just don't know what you don't know. I keep saying that. You don't know what you don't know, and you can't see what you can't see. And every trade you win before you experience is simply luck. So you have to develop a good mindset. I remember I just wanted a live account. That's all I wanted, to go live. I think, been trading for a month or so, and I persuaded Ty to come round to my house and come just link me up to something where I can make money. He's laughing because he remembers that so clearly. And then I thought, this is, how difficult can trading be? I'm a positive optimist. I've got a financial background. I'm good at maths. I'm gonna crack this. And remember, the first trade, I was on the NAS, a buy came, click buy, 20 pips. It confirmed my optimism that this is easy, where's all the complication? How wrong I was. I grew my account from $1,000 to $800, and then from $800 to $600, and then before I know, I had $200, and I thought, where's that money gone? What happened? And that's often how we start. I went live way too soon. And there's a reason why we try to quote some old things first. There's a reason why 90% of traders lose 90% of their money in 90 days. That is just the statistic. There's only 1% that are profitable after a year. And there are reasons. I mentioned those reasons before. Firstly, most people don't have a good indicator. I mean, they go to YouTube. And I confess, after losing money, I took to YouTube for my salvation. And I read the titles would say, 100% win rate, you never lose again. I tell you what, it's just was all a lot of rubbish. So there was no good. So people lose, they got no good indicator. They had no strategy. So there would be indicators, but there'd be no strategy. There was also no ongoing training or education, no capital management. There was no community. And most importantly, there was no trading mindset. That's why the psychology of trading is so important, the patience, the discipline, handling your emotions. And I realized that it's not, as I've got a logical, methodical, rational brain, but I realized that wasn't enough for trading, was emotion. And the way we think is a key reason why traders fail. They say the 3 most important aspects to successful trading are, firstly, psychology, which I'm going to talk about tonight, managing our emotions. And I realized my emotions are not mature enough to match the lot size I was trading with. I was way off. I had no idea that there was a connection. And then the second one, so the 3 important aspects of trading. One is trading psychology, mindset. The second one is strategy. learning to do with rules, technical, fundamental analysis. And the last one is money management, managing your risk, protecting your capital. But at the end of the day, it's actually trading psychology, it's your mindset that will make you successful. So for me, psychology is more important than technical analysis. I mean, anyone can learn the rules, and that's why trading does mess with your mind, because it seems so simple. It seems so simple when you look. Even look, we got simple rules, so it can seem incredibly simple until you actually are live on the charts. And so eventually, trading, the psychology comes far before being analytical. So initially, when you start your journey, it is about learning the indicator, learning the strategy. But soon you realize that good trading psychology is what will make you successful in the long term. And that's why, obviously, we've developed TrendForce, is to try and address the reasons why most people fail, to develop a mechanical trading system that takes emotion out of everything. That's why we have things called rules, very, very strict rules. And so when we talk about psychology, that's what I'm focusing on tonight, is learning to deal with fear. So fear is a huge thing. I cannot tell you, how fear has plagued me. When I started trading, initially I was overconfident. Then after losses, I became incredibly fearful. And so before I was like firing at everything that moved. Every buy sell I was clicking and losing. And then obviously it hit me that this is more difficult than what I thought. And then I became fearful. And then I just sit and look at the charts for 2 hours and too scared to press a button, because I became scared of losing money. So I went through all these, and I can see heads nodding and people smiling because that's what happens. You go through these huge swings of emotions until you can come into balance and address the things, that are causing those fears. Because once you get fearful, you become irrational, and you get into revenge trading. I mean, I was an expert revenge trader in my first year. I mean, I didn't lose thousands and thousands. I lost a bit. I was trading at a very low lot size, but still, if you don't have your emotions under control, you'll get sucked in, And of course, the big players, the big banks, financial institutions, they're the ones working the markets. They are, they go on stop hunts. They're there to take out retail traders. And so you've got to have your mind under control to be successful in this game. So, I mean, look, those are the harsh realities. But the good news is it's incredibly satisfying once you can master this art of trading. I mean, for me, I could now live anywhere in the world and make money. I'm not bound to any kind of country. I'm not bound to any part of the world, east, west, north, south. As long as there's internet, once you've learned to master the skill of trading, you are completely free. And that's probably the wider goal of what we're doing in our TrendForce community, is to bring people into financial freedom. Anyway, let's start talking about the fears. And I'm going to be honest about my 2 biggest losses tonight. I have sometimes mentioned 1 or 2 of them, and I put them in just to be real, because of course I do make losses. But I want to deal with the 4 fears of trading. Now, these I haven't made up. These are well known, and you will know these 4. So the first fear is being wrong. The second fear is FOMO, fear of missing out. The third fear is losing money. And the fourth fear is leaving money on the table. Now, for me, probably after my ego got badly punched and I realized it was more difficult, probably I had all those 4 in one go. And eventually, if you don't deal with those fears, it will like paralyze you. And as I said, I just end up looking at the charts for hours, looking at these signals going off, and then too scared to press the button. So we have to deal with our fears. So we're going to look at those 4 tonight. And while I was preparing this afternoon, I thought of some cures too. So some of them are quite short, but also how can we overcome some of these fears? So the first fear, number 1 that I mentioned, is being wrong. So if you have this fear of being wrong, it will definitely stop you taking trades. So that's what, as I said, once I realized that it was harder than I thought and fear began to paralyze me, it stopped me taking trades. And so what happens is a setup comes, even a good setup comes, but you hesitate because you think it could be wrong. And then the trade takes off like you thought it would, and then you beat yourself up for not taking the trade. Come on, who has done that? I mean, I'm sure that every single trader has to go through that. So fear stops you. You beat yourself up. You should have taken that one. And then there's nothing worse than letting that kind of fear take hold of you. But I realized the cure is very simple. And this is one thing we obviously emphasize with our TrendForce indicator and strategy, is like simply sticking to the rules of the strategy. And that is as simple as that. If you stick to the rules, you'll find that fear will lift, because basically, it's been proven that our strategy, our indicator, is profitable if you stick to the rules. And so, but you will often hear me say, for example, for me, I'll say it again, towards the end of my talk this evening, but you've got to be crystal clear about the kind of trades you're going to take and the ones you're going to leave. And so you'll often hear me say, when we do our live analysis, and I'm sure this will happen tomorrow morning, I'll say something like, here's a signal, but I'm not touching that. I'm sure if you heard me say that, I've said that many times. Here's a signal, so often there'll be a buy or a sell. I say, I'm not touching that. Because and look, I'm still growing. I still take losses. I'm not the best trader in the world. But you have to become convinced of what setups you're going to take and those you're going to leave. And if you don't, this is the bottom line, if you don't stick rigidly to your rules, you're simply gambling. And so that is the bottom line. We don't want to train gamblers here in TrendForce. We want to train skillful traders that learn to take the low risk, high probability signals that come our way. So it's really sticking rigidly to the rules will get rid of the fear. And so again, you have to get to the point, and this is what I've been working on myself. You have to get to the point where you can make unemotional decisions about whether to enter a trade or not. And so again, you've got to become a mechanical trader, not an emotional trader. So you shouldn't be double-minded about an entry. And so that's why I stick to the rules. And one thing I learned is that your rules will be so rigid that if a setup comes that fulfills the rules and you don't take it, you're breaking the rules. And so if I leave my computer on and I'm trading, if a setup comes, I take it. You've got to be that disciplined. And so you should never say to yourself, I should have taken that. Oh, beat yourself up, should have taken it. No. If your rules are rigid, it will keep emotion out of your trading. And that's the key also to revenge trading. I mean, every revenge trader, I don't think there's a single revenge trade you can take that sticks to the rules. Generally, revenge trading breaks most of the rules in a strategy. And so if you stick to the rules, and we've got, simple rules that show you, whether the zones, test the zones. We look at the trend zones, we look at the angle of the 21, and we wait for a signal, those kind of things, the slope of the 21. They are very, very simple rules. And so if you stick to the rules, you won't get, suckered into revenge trading. And so the more I stuck to the rules, the less fear I had. Because when you haven't got rules and you see buy or sell, like all these emotions will go through. Should I, shouldn't I? And you're kind of being double-minded. No. If you have got clarity about your rules, you're single-minded, you know the setups you're going for, then you will not have that fear. And so for me now, if there's a buy-sell signal, I try and be, look, I'm not perfect. As I say, I want to say I'm still on a journey. But when I see a buy-sell signal, I look instantly. If it's right, I take it. And I don't have this fear going around me. So rigidity to the rules, obedience to the rules is what deals, with the fear of being wrong. Then the second one, now that was the shortest one of the four fears. The second fear is FOMO, fear of missing out. And this happens mostly when a trade has already begun to move. I remember the first strategy, I can still remember this vividly in my computer. Ty, you may not remember this particular instant, but I remember the first strategy I tried. We would trade live with the group. And I remember it was a sell, a potentially good sell setup came. And because I lacked confidence, I didn't press sell. I just, we were in this group and there was kind of a bit of a silence when the signal came. I didn't press sell. And so I hesitated. And then suddenly I heard a voice saying, are you in? And someone else said, yes, I'm in. I'm up 15 pips already. So what do you think? What do you think I did? What do you think I did? I pressed sell. Boom. I didn't want to miss out. What do you think happened to me? I pressed sell, put like a 15 pip stop loss. I thought that, this is going to go. Of course, what happened? There was a pullback and I got stopped out. Yeah, I'm thinking, flip, these guys are in the trade. And what happened, what do you think happened next? Then a voice said, I'm already up 30 pips. This trade, something like this trade's really moving nicely. What do you think I did? I pressed sell again. Well, what do you think happened? I got stopped out. There was fear of missing out. And I remember, I think, I can't remember the exact details, but I think the trade ran for 60 pips and I made a 30 pip loss. And I sat looking there, I thought, how did I do that? How could I lose 30 pips when everyone else was making a profit. And then I remember I felt so sick afterwards because everyone was saying goodbye, great to leave on a win, I have to go to work now. I mean, it was quite depressing, you know, but it was FOMO. It was simply FOMO. I had fear of missing out. I didn't stick to the rules. I didn't, for example, stick to no late entry. I mean, it was clear, you know, it was a clear, broke every rule of the book, although we didn't have rules like we have now. I mean, I entered late. My stop loss was too low, but it was FOMO. You know, FOMO will lead you to do that. I mean, this, I've already mentioned the cure. The simple cure is no late entry, you know, for FOMO. If a trade takes off, if we're doing, you know, live analysis and a trade begins to move, if you've missed the entry and there's no signal, exercise patience and exercise discipline. You know, I remember someone once saying about trades, you know, there'll always be another trade. You know, someone once said, you know, what happens if you miss a taxi? What do? You wait for the next taxi. I can tell you now, there'll be no shortage of trades. There's been no need for FOMO. And I remember, I mean, my biggest losses have come through, I think, through FOMO. One was definitely through FOMO. I think I may have shared this a while back. You know, we were in a trading forum with another mentor, another strategy, and there was big news. It was interest rates. And I mean, we knew in advance the rates were getting cut. You know, the Dow and the Nas, we were on the Dow was going to rocket. I mean, the price prediction was it's going to go up. The mentor said, and correctly so, that price was going to rise. So you know what I did? The first thing I did wrong is I upped my lot size. I thought, man, this is the golden opportunity for me to grow my account today. So I broke the rule about risking more than 2%. I thought, man, this trade is going to go. And suddenly this big candle appeared. I got lured in, you know, because I didn't have the disciplines, the emotional maturity. This big candle came. I thought, this is the way to grow my account by 20% today, whatever it was. So remember, I'd upped my lot size. The predictions were up, and I pressed buy thinking, here we go. This is going to make me, I'm going to make hundreds of dollars this morning. Of course, you know what happened? I mean, there was a pullback and it pulled back, boom, and stopped me out. I mean, honestly, I physically felt sick. I lost hundreds of dollars that day. I couldn't even tell my wife at first. I went to the kitchen looking depressed. Honestly, I couldn't eat breakfast. I felt so sick from losing that money that I couldn't eat breakfast. But it was like FOMO, you know, FOMO. I just didn't want to miss out on the move. And of course, you know what happened? It stopped me out and then immediately bounced off something. And then, I mean, I think it went up 300 pips. So it was just rocketed. But it was a bit of a late entry and it was FOMO that stopped me out. And so, you know, you got to be careful, you know, that with FOMO, stick to the rules. You know, if you miss an entry, there'll always be another trade. But I tell you, entering late, you know, FOMO leads to late entries. You want to get on when something's moving and you enter at the wrong time. I mean, we've got a whole bit of training. Maybe we can do it again sometime, you know, dealing with entering a trade rate, a trade late. Don't do it. And so we have to deal with FOMO. I remember too, how that was my biggest loss, my second biggest loss. I've only made one real big loss. This thing was either the start of this year, and I learned a big lesson. That kind of, I've got to say this now, we have to learn by our mistakes. I mean, we will make mistakes, and it's inevitable. We're learning a skill that's very foreign. It doesn't come naturally, and it takes, you know, a lot of growth to become successful. But we have to learn by our mistakes. I remember, I think it was either January or February or the end of last year, I can't remember. It was my second biggest loss that I'd won 9 out of 10 trades. I always measure like in blocks of 10. I'd won 9 out of 10. Man, I was feeling like, man, I've aced it now. I mean, what do you think? This is not quite part of the point, but it's good to bring with psychology. What do you think? What emotion was I experiencing when I'd won like 9 trades in a row? It was euphoria. And I tell you what, euphoria is dangerous. I needed just one more trade to get 10 out of 10. I mean, honestly, I thought, how difficult can this be? I've won 9 in a row. I'm on a roll. I didn't even think that I was suffering from euphoria, but they say, you know, more traders lose money from euphoria, from a winning streak than a losing streak. And so there was a move. It already happened. I mean, the Dow was in a great move up. I mean, everything was trending. The candle, it just turned bright green. It was on an uptrend. I mean, and there was about 20 pips to a big round number. I thought, here comes my 10 out of 10, 20 pips, everything. Look, there was nothing that said that trade could reverse, And so I pressed buy, and as I clicked buy, this massive wick appeared out of nowhere. The biggest wick I'd seen for months on the candle. I clicked green, and this green candle turned into this doji, and this huge wick appeared. Now, it happened as I clicked buy. So think about the situation I was in. I haven't even had time to put my stop loss as I clicked buy. And it was, of course, a late entry. There was no signal. It was a real late entry, just looking for quick 20 pips. And as I clicked buy, I couldn't even drop my stop loss. I hadn't even put a take profit. I hadn't got my mouse yet on the stop loss box. And so then, of course, as the big wick appeared, I went from, I tell you what, in a millisecond, I went from euphoria to fear. Because now there was this big wick. It was about an 80 pip wick that was dropping. It was 40, 50, 60, and now I haven't got a stop loss. I'm thinking this thing could drain my account. And so out of fear, I grabbed my stop loss and I just dragged it down to just below the wick and let go at about 100 pips. And boom, you know what happened, of course. It stopped me out. And I felt sick. And then the fear so blinded my judgment. This is what fear does. It blinds your judgment, because if I wasn't in fear, I broke the rules. And because I was in fear, it completely blinded my judgment, because literally, I'd say probably 15 pips below where I just dropped my stop loss was the 233, which is one of this in an uptrend. When, once price is moving, we all know the 233 is one of the best moving averages for support. If I just dropped my stop loss another 15 pips, I would have been safe. So, all of you can type now what happened. The stop loss kissed the 233, stopped me out, kissed the 233. And honestly, I think it went up 200 pips. It was just a massive, stop hunt. But fear completely blinded my logic in that split second. I absolutely panicked, euphoria to fear in a millisecond. And I tell you what, I learned. I took it on the chin. I broke the rules, late entry, FOMO, euphoria, everything blinded me. And so we got to realize, that we've got to keep our emotions under control. And that's why sticking to the rules. The probability of that reversal was very low suddenly when everything was so bullish. But, I heard someone once say, and I say it myself, I kind of quoted myself, you never know what the next candle is going to do. And I've learned that the hard way. You never know what the next candle is going to do. And that's why we have to be so rigid with our rules. And that's why, often these runs are luck. I shouldn't even boast it on the feed. I boasted, I think it was 13 or 14 wins in a row. And I had 13 in a row, equaled my record. And then I put that on there. Of course, then Tim Dove is on the feed tonight. He asked, how's your winning streak going? I lost the next trade. And that's why I think I joked it off. I said, hey, Tim, could you take your post down? It was tongue in cheek. But it's to win 10 in a row is rare, Not even experienced traders have high win rates like that. But again, it was a bit of pride, a bit of euphoria got into me. I shouldn't have said what my winning streak was. And that's why, runs of good luck are bad. It's proven that euphoria blinds you. Fear can blind you. Euphoria can blind you. So when you get on these runs, you've got to stay humble, stay focused, and stick rigidly to the rules. And I said it earlier, most traders go bankrupt, not from runs of good luck, not runs of bad luck. They up their lot size, they take a risk, they think they're invincible, and boom, suddenly it goes. So again, the cure for FOMO is always don't enter late. And that's one of the keys, don't enter late. Then the third fear is losing money. I think we probably all got that fear, losing money, And that's why losses can really lead you to be irrational and to stop following the rules. That's often, again, how revenge trading comes in. So losses can lead you to be irrational and get you to stop following the rules. And I've learned, and I think over the training of the years, I've thrown some of these figures out, but you don't have to be winning all the time to be profitable. Experts say if your win rate is like 55 to 60%, you're doing well. If you can win even 50% of your trades, if you are risking, 2 to 1, you're following the rules, you're following the buy and sell signals, you will still be profitable. So I remember David Paul, I think he's passed away now, but he was one of the best traders in the world. He wanted to be a professional rugby player, British guy. He moved to South Africa, got injured, and then he took up trading. And I remember this, he was being interviewed. I actually watched this interview where this lady was interviewing him. And the lady kind of started off by saying, gee, you're one of the most successful traders in the world. But he said, hold it, wait a minute. He said, I'm wrong with 40% of my trades. He said, my win rate is only 60%. Another expert said, I remember hearing too, that their strategy has only a 58% win rate. And so, the key thing is this, is that we know that 90% of traders who start lose, but they've worked out that even the 90%, this is really key to understand this, even the 90% of traders that lose, they've got a win rate of about 60%. They should be winning, but again, it's the psychology that actually makes them losers. So they're picking the right trades. They've got a 6% win rate, and it's simply this, and this is kind of well known, that most beginners or people that haven't got their mindset right, they haven't worked on their emotions, they're not following rules, they are too optimistic in a losing trade, and they're too pessimistic in a winning trade. And so this is the key reason. This is so important. The key reason why most beginners lose money. They're optimistic when they're losing. So in other words, they click buy and the trade begins to run, and then it turns the other way and they lower their stop loss. They lower. And eventually, of course, they get stopped out for a whole lot of money. And so, that's why. So being too optimistic when you're losing, I still find, I've got to be honest, the hardest thing is closing a trade when it's going nowhere. I think for me, that's what I've got to work on. You click buy, you follow the rules, hopefully, and I do that. I'm following the rules, and the trade doesn't work out. And again, you never know what the next candle is going to do. Trading is based on probabilities. If you stick to the rules and you're rigid and disciplined, you will be successful and profitable. But not every trade is going to go the way you think it's going to go. And so I still find that once I've clicked buy and the trade starts going sideways, and I'm, down 2, 3, 4 pips, I find that the hardest to close a trade. And that's the reason why most beginners lose, is that they don't close a losing trade. They drop their stop loss. They're optimistic that it's going to go the other way. And that fear of losing money makes you irrational. And you somehow have this blind optimism that the trade's going to reverse and go the other way. And so the cure is simple, is be rigid with your stop loss. That's the fear of losing money, is be rigid with your stop loss. That if you're rigid with your stop loss and you stick to the rules, you will be profitable, and never move it. That's the worst thing you can do in trading, is that I think it's pride. For me, that's the mistakes I made in my early years of trading. I just didn't want to lose money. I didn't want to be wrong. I thought I could crack this. And so when I clicked buy or sell and the trade started going sideways and creeping towards my stop loss, I thought I'm just going to lower it like 5 pips, maybe just another 10. And before you know, like, you've loaded away and you get stopped out, and it's terrible. You've got to cut your losses short. You let your winners run, cut your losses short. And that's why, I think part of losing money is you have to learn to deal with losses. That's the key thing. You will lose. That's the hard part. Remember, trading is a journey. You're not going to do this overnight. It takes a few years to become really successful, and really profitable. You're not going to do that, hopefully, with our strategy, our rules, our community, our training. It's not going to take as long as the average. We want to see people profitable way earlier, but you have to learn to deal with losses. I remember someone once said, so it's not my own quote, is you have to see losses as a business expense. It's simple as that. If you can have that mindset, you've lost money, well, that just is a business expense. And that's actually completely valid. If you're trading as a business and it's your source of income, losses, obviously, it comes off your tax bill, so it reduces your income. So eventually they won't hurt, but I'll tell you when they do hurt. When my losses hurt is when I risked more than 2% of my account. That's when they will hurt. When you break the rules, you risk too much, then they can be painful. But the more you stick to the rules, the more you stick to your stop loss, the more you stick to not risking more than 2%, the less they will hurt. And it also comes from what I've learned too is, I mean, I was crazy, because I mean, I'm well off, I've been blessed. And I tell you, it's harder for people that are blessed financially to learn to trade because losses don't hurt you that much. And so I want to say that, if you are wealthy, you're learning to trade, there's no shortcuts in this process. If you're wealthy and you're learning to trade, you'll simply lose more money than people who are less wealthy. There is no shortcut. Wealth is no shortcut to trading. Eventually, hopefully, we will become wealthy through trading. So you have to learn to deal with losses. So for me, because I've been blessed financially, I would risk way more than I should. And I would go through these psychological battles. I thought, well, I'm going to up my lot size. I'll be honest. I thought I'm going to trade at $10 a pip, and I'm going to trade the New York Open. And so, that worked out for me. Got up at 130. And I think the first time, man, I took this trade, I was up, man, I think $60, 60 pips. It was a lot of money. And then, boom, it suddenly reversed and I didn't get out. And then, man, I lost. And then I couldn't sleep. It was 1:30 in the morning. The loss kept me awake. Oh, my gosh, how do you go to sleep after losing money? I thought, well, the next day, I'm going to win back what I lost. And I did, actually. I got get up the open, this big lot size. It was a counter trend. It was like these 2 weeks, like shot up 80 pips in no time. Wow, click, went to sleep. But now the euphoria kept me awake, My emotions were completely out of control. So the one night I couldn't sleep from the loss and the emotion. And the next night, the win was like euphoric, And then, of course, it didn't work out. I ended up losing more, and I realized, when you trade with a lot size higher than your ability, that's when fear comes in. Simple as that. You cannot trade with a lot size that is higher than your ability. And how do you find that out? You find that out through pain. You found that out through pain and loss. And that's what everyone goes through. You will go through that. You will go through loss, you go through pain. And eventually you will find, and this is the journey of trading. Eventually you'll find your comfort zone. And then you begin to stretch yourself slowly by growing your account and honoring the 2%. But honestly, there is no shortcut. In the first year of trading, I broke every single rule. I would lose money. I chopped my account up, and it wasn't, a lot of money. I had some big losses and big profits until I kind of sobered up. But eventually, I used to lie to myself. You can't believe you wonder how people lose hundreds of thousands, but it's because they just get completely out of control emotionally. So I would even go through denial. I thought I need to join AA. I would go through a loss, and I thought, no, I'm going to increase my lot size, but I'm going to follow the rules. That doesn't work. You've got to go through the process of pain, of loss, of discipline, of patience, of following the rules, and eventually, you become a winner. But that is the journey, But also the other thing, I did throw this out once just to remind you that, statistically, a lot of people obviously, look at stats of how people trade and wins and losses. Losses tend to come in groups, and that's it. I wish you would have 3 wins and then a loss, 4 wins and a loss, 5 wins and a loss. But it never works like that. They've worked out statistically. We don't know the reasons why. Just how it is that losses always come in groups. If I look at my trade account, you'll see there'll be like this wonderful run, and then there'll be like maybe 2 losses connected. I didn't get maybe 3 in a row, but they'll all be connected in clusters, especially when you're beginning. They say that after every 8 trades, you're likely to get a cluster of 3 losses. After 16 trades, you could get 4 in a row. And every 32 trades, you could get 5 in a row. Now, that doesn't mean you win 27 and lose 5. You may win 4, lose 1, 5 and 1. And so you're still profitable. But then suddenly you could get even 5 in a row. It happens. That's what the statistics say. And so learn to deal with loss. And again, don't trade with a lot size higher than your ability. And there's only one way to find out, and that's through the pain of loss. You quickly find, your comfort zone. So eventually you'll trade a lot size where you take a loss, you lose 30 pips, okay, maybe a few $100, $100, whatever it may be, whatever your lot size is, but you find eventually you won't hurt. You'll see it's a business expense. I followed the rules, didn't work out. I'm not going to revenge trade. I'll wait for another setup, or maybe I'll call it a day. Some of the pros say, it shouldn't happen if you're trading with TrendForce, but if you're in one session and you make 3 losses, in one session, turn off your computer, walk away and leave it for a day. Because after 3 losses in a row, it's likely that you're going to revenge trade. So, I mean, if you follow the rules, you shouldn't make 3 losses in a session, but it can happen, then walk away. Then the last one, just in closing, hopefully getting some value here, is leaving money on the table. That's another one of the big fears. I mean, that I've had to wrestle with too. I still, it's funny when you trade, you remember your big losses, you remember your big mistakes, and hopefully learn by them. But I remember before Ty asked me I dug up some stats that I shared with him a long time ago. I dug them up, Ty, and I'm going to talk about them in the context of this next point, leaving money on the table, because I remember I just, it's funny that you can just get irrational sometimes. I was just convinced that this buy was just going to rocket up like 130 pips. I had a target of 130 pips. And so for some reason, I just thought this one's going to go up 130 pips. And I thought, okay, my weakness is sometimes I close trades too soon. And so this trade took off. And of course, it climbed. It got up to 80 pips. I thought, man, this is well on the way to the 130 pip target. And then it started to pull back, and it pulled back more, it pulled back more, it pulled back more. I thought, no, this is before I understood like fibs, If I'd done my 236 pullback, I would have taken like, probably 60 pips or something. And fortunately, my stop loss was, I moved it up to 30 positive. But I was up 80 and I only walked away with 30. I mean, that is just not a good feeling, not a good feeling. And so, I had this fear leaving money on the table. I want to let this thing run, and that fear completely overtook my rational judgment. And instead of taking 80, it peaked at 80, I only took 30, And so the cure is the cure for leaving money on the table is simply don't try and knock it out the park. I've learned that. Don't try and knock it out the park. Often we feel that every single trade is going to go for 100 pips. I think I've lost a lot of money, not gone negative, but I've lost a lot of money by trying to knock it out the park, thinking, well, it's pulling back, it's going to hit the target, I can't think of my early years of trading. How often, I was up 30, up 40, and I walked away with 5 or 10 pips, still a win. But I'm thinking, I left so much money on the table. And so, I mean, you've got to have realistic expectations about where trade may go. And these are the figures I looked up again. These are fascinating statistics. So the point is, you've got to have a realistic expectation for where a trade may go. So especially if you can picture a sell. So if you're looking on the screen, you've had this big sell and it's flattened out, and now we expect it's going to move up again. Most times we expect that, okay, we're going to click buy. My expectation is going to go to the previous high and I'm going to make 100 pips. But these are the statistics. All right, so this has affected my targets, my expectations of targets. So if you picture, we've had a sell and it's bottomed out, and now we get a buy signal. Let's say it was a big counter trend sell. We've been waiting to trade with trend, and as the pips turn, the market turns, we get a buy signal. We press buy. Now, obviously, our expectation is we want this thing to go to the previous high. This is going to be 120 pip trade. So these are the statistics on average. So when you get a reversal or a retracement, 90% of trades will go back to a quarter of the previous top or bottom. All right, so 90% will go back to a quarter of the previous top or bottom. That's why with TrendForce we've tried to develop the safest way to get into a trade as early as possible to maximize the pips. So 90% of trades will go back to a quarter. So in other words, the lower your target, and obviously we've got, stop loss, and we have got targets, TP 1, 2, and 3. So 60% of trades will go to half of the previous high or low. So that's quite a good figure. But listen to this, only 20% of trades end up going back 3/4 of the previous move. So if you think it's going to go to the previous high, you've only got a 1 in 5 chance of your trade. Now, the reason why that's important is because if you're thinking it's going to go back all the way and it retraces, you're going to stick in that trade thinking it's got to go back to the top. And that's why I was up 30. I walked away with, with whatever it was, with 30. And then only a mere 10% of trades go all the way back to the top. And so again, you've got to have realistic expectations. And so if you take a trade and it's now turning the other way, I'll go through those figures again. 90% will go back to a quarter of the previous top or bottom. 60% will go halfway. Only 20% will go back to 3/4 of the previous move. And then only 10% go all the way back. So that's how I was caught. I would try and knock it out the park. I'd set these huge targets. Now, this was obviously a little bit before we developed TrendForce to the way it is today with our take profit targets that are normally quite good and realistic. But generally, when you're trying to go to more than 50% of the previous move, you can end up with less, less than what you could make. And so, I mean, the cure for this, and this is the kind of closing my talk tonight, the cure for, leaving money on the table is just to set a clear target. Now, again, fortunately, our indicator, sets TP1, TP2, and TP3. We've talked about where to go, but I'll always aim for something. And so if it's not TP1, 2, or 3 with the buy or sell, then I'm looking at a big round number. I'm looking for a pivot. I'm looking for a key level of a higher time frame chart. But I'll always set a target. So never press buy and just aimlessly think, where's this trade going? Manage the trade. And that's what we try to do in our live sessions. It was great in the last live session we followed that trade that hit the target. It was a bit of a risky trade, but it was great to see it hitting the target. And then it took 1 hour and 5 minutes, that trade, which was quite fun in the last live session. But then I could talk through how I would have managed that trade. Admittedly, I did say I probably would have closed it off if I had a lot of money on it, but it did hit the target, which is great. And so we've got to learn to manage our trades. And so again, the key to leaving money on the table is just have a realistic target. And then, of course, you also manage your stop loss, but that's another training for another night. So basically, in summary, before I hand back to Ty, so I thought, what is the key to trading without fear? So my journey is this. I just thought of 8 quick things to end with. So what are the keys to trading without fear? Number 1, what I'm talking about tonight, and a few of them will be included, work on your mindset. Practice patience, discipline, deal with your fears and keep emotions under control. Number 2, stick rigidly to the rules. If you stick to the rules, you'll find that your fear factor will dramatically shrink. Number 3, be very clear-minded about the setups you're looking for. So I'm looking, obviously, for very clear setups for my trades. It's got to meet the rules. And, the bigger picture I can talk about another time. But basically, I'm very clear. That's why I said in live sessions, I'll say I'm not touching that or it's something I'm going to take. Only enter on a signal. If you enter on a signal, and so all the signals we've developed with TrendForce, I mean, the majority of times, the reason why we have more, I don't know how many signals we counted. It was about 12 or 13 ways you can enter a trade besides buy and sell. But the signals that we've developed in the strategy generally should get you to at least a break-even position. So generally, they're designed to, when price is moving quickly, and if you press buy or sell and enter on a signal, you should at least get your stop loss, to 2 or 3 pips. And so if it does reverse, at least you're not making a loss. Number 5, another training night, we can do that, protecting your capital by managing your lot size. I kind of covered that tonight. Number 6, never increase your stop loss. Be rigid about that. Number 7, trade with trend. I do take some counter trends, but they make me nervous because I know counter trends are trading into what I call oncoming traffic. I do take them from time to time, but I'm very clear-minded about the kind of trends I take. And so trade with trend will release the fear factor. With counter trends, you're never quite sure what EMA it's going to hit and what time frame, and then reverse and go the other way. And finally, don't trade on what you think will happen. I mean, that was probably, I was beginning on a low lot size, but for some reason I was convinced that price was going to go up. And there was divergence on the MACD. I just learned the MACD, and then it broke a trend line and didn't go up, so I lowered my stop loss. It broke another trend line. It didn't go up. I moved my stop. Eventually, I don't know how many times it broke trend lines and kept going down. I mean, if I'd zoomed out, I would have obviously seen, we're in a downtrend. But I was convinced in my mind that price was reversing and moving up. So you never trade on what you think will happen. Use the indicator. That's why I think the TrendForce indicator is very good. We got our trend table. We look at multiple time frames. We shouldn't trade on what we think will happen. Look at what the indicator is telling you will happen. So again, those 4 fears again, we each will probably have our own little weakness, but the one is being wrong. Number 2 is FOMO, fear of missing out. Number 3 is losing money. And number 4 is leaving money on the table. And so I'll leave it there tonight. Hopefully that's helped you. And I'll hand back to you to close everything.
So good. Excuse me. So good. Thank you so much, Dad. That was brilliant. Just catching up on the chat a little bit and seeing what's what. I love it. Vickers is saying small daily targets, obviously realistic to your trading style, has changed my journey completely. So there you go. I know as well, it has not been my historical norm to actually drag the TPs to just where the TPs are, because my biggest fear has been, I worked through the fear of loss in the early days and the pain of that. Then it became the fear of missing, not fear of missing out, sorry, fear of leaving money on the table, which I know Tom Hogard, that's his biggest one. And so that's why he never sets targets. And what I found, like Dad was saying as well personally, is that I will get into a trade, and if it's running in the right direction, my biggest battle is the euphoria kicking in, zooming out and looking at the most likely long-term targets and thinking, I'm going to put my tag profit way up in the clouds, and because I hate getting knocked out too early or getting off the bus when it's just leaving the station. What do you think happens when I do that most of the time? And I will drag my stop loss stuff and move it up, but I would close so many. I'd have Dad's win rate if I just put that TP on TP2 or TP3 instead of aiming for the clouds. And like Vickers just said there, shut the lid and walk away. And so guys, you're each going to go on a journey of figuring out which of these fears are the fear of your current season, depending on how long you've been doing this for. And just because you've got one right now, it doesn't mean that that's going to be the only one. You go through different seasons depending on where you are on this journey of wrestling through and breaking through these fears, overcoming them, learning to recognize them, and then really applying those cures that Dad mentioned. So Dad, once again, thank you so much for putting in all the time and effort to detail all of that. Maybe please drop some of those stats in the chat or send them to me, those pullback stats, because I remember when you did that at a live event, that was gold. I try to catch up with it, but that was really, really, really appreciated. Because once you've got those statistics in your head, they also become great things to pull on when you're in the middle of those moments. You can know rationally the statistical chance of this, doing this is X. And that's what you need to remind yourself of when you're in those euphoric moments. So just seeing anything else in the chat. Tim D is saying amazing. The other Tim, our wonderful rebrand Tim, thank you so much. Tim Dove, really appreciate you. Guys, we'll wrap it up there because I've got a bunch of editing to do, and then we're back at 5:30 a.m. for our live analysis. So I will drop that reminder promo text.
Yeah, tomorrow morning.
We are on in the morning, so a little bit less sleep for me tonight. But otherwise, thanks so much for tuning in live. Thanks for watching us later. Otherwise, we'll leave it there. Enjoy the rest of your evening, and we'll catch you guys in the morning. All right, love you all. See ya. Bye.